Hi, my name's Jim Dossie, and I'm an attorney and CPA at Dossie and Jones Law Firm in Conroe, Texas. And today we are going to talk about the Corporate Transparency Act. Um, Probably the biggest thing to tell you to start is that this is don't shoot the messenger. This is something that is coming down the pipe. It is not my law, but we are all having to deal with it. So definitely there's going to be some things in here that you may be surprised about. Um, and and anyways, that's hopefully by the end of it, you'll have a better understanding of what we all have to do for small business nowadays. Okay. So we're going to kind of talk in general about the Corporate Transparency Act, what entities are subject to that regulation, the reporting requirements, and also go into some penalties. The other thing is in here, I've sprinkled some kind of common questions that we are getting along the way. Um, Questions from our clients that are things you may not have thought about, but will definitely impact the filings as we go forward. So the Corporate Transparency Act, it actually comes from some regulations that happen in Europe and actually across the world. So over time, every now and again, I get asked to form an entity in a different country, LLC, corporation, or different entity in a different country. And you always have to provide very detailed information about the owners. Most of the time, you have to provide copies of passports, copies of driver's licenses. Sometimes you even have to provide copies of bills showing that the person is living there. Well, we've never actually had this in the United States until now. So what has happened over time is that apparently the United States has become the money laundering capital of the world, and because it's very the lack of reporting about the ownership of entities has kind of encouraged that, and so this group, FinCEN, it's actually organized under Treasury. Treasury is also who the IRS reports to. So if you think of FinCEN as kind of like a sister organization of the IRS, they're kind of they're together under Treasury. It's fun. And FinCEN actually it's called the Financial Crimes Enforcement Network. That's what FinCEN stands for. So this whole act is around anti-money laundering. Okay, so let's kind of get into who this actually applies to. Basically, almost every state filing entity, and we'll kind of get into that with only a few exceptions. The exceptions mostly are related to entities that already have to provide detailed information to the government. So if you have any kind of securities registration, insurance companies, banks, tax exempt entities, government entities, those are all exempt from the law because they already have to provide detailed information about their companies. There are a couple other exceptions, one being an inactive entity and the other a large operating company that may apply, but probably, as we'll see on the next screen, probably not. So a lot of times we'll have clients that will ask us, hey, we have this entity, maybe it only holds a piece of real estate, but we're not doing anything else in it. Is that qualify as an inactive entity, which would be exempt from this new law? No, it would not. So there's a very specific set of rules to qualify as an inactive entity. So, and it's there on the left side of the screen. So it has to be in existence before January 1st, 2020. It can't have any assets in it. So basically, this is like maybe an LLC that literally doesn't have a bank account, no assets in it. It's just sitting out there doing nothing, and you've had it since before 2020. So if you kind of think about it, that's a pretty narrow set of scope as to what would qualify as an inactive entity. Then there's also something called the large operating company. And this is basically the idea here is that if you're a larger company, there's other regulatory things that you have to do that you're going to be subject to, that you're already reporting significant information to the government. And this would be like your publicly traded companies. But if you see here, the definition of a large operating company, according to this law, is you have to employ at least 20 full-time people, and you have to have more than 5 million in gross receipts in a year. And so it's both of those together. So you can have 20 employees, but only have 2 million in revenue. Well, you're still subject to the law. Or you can have 5 employees and 20 million in revenue, still subject to the law. And so it's really both of those requirements that you would have to meet in order to be exempt under this large operating company rule. FinCEN actually estimates that there's going to be over 33 million of these companies that are going to be subject to this law and filings in the United States. There's a couple of important concepts to keep in mind. One is something called a company applicant. And these are the people that are actually forming the entity with the Secretary of State. The important part here is that there can be more than one company applicant. So for me as the attorney, if I'm forming an entity, if I have anybody that's helping me form the entity, like a paralegal, for example, they would also be a company applicant. So it's not just the person that is actually filing the entity, it's everybody that's actually involved in filing the entity as well. One thing that has come up quite often is whether, let's see here, whether a spouse is considered a beneficial owner. And we'll kind of get into what a beneficial owner here is in a minute. But we in Texas live in a community property state. And so what you will see often is that one spouse will be listed as the owner of an entity. Well, the question is, okay, well, a community property state, do we have to report on the spouse too? Yes, the answer is yes. So they, under community property rules, are also a 50-50 owner with you, even if you're the only owner listed on the company document. And so same kind of rules apply. Now, one of the things that could exempt them from that is if it's actually separate property of that person. If it's separate property of that person, then obviously you wouldn't have to submit the spouse's information as well. But you have to be able to verify that that is actually separate property. And that could be through inheritance, a gift, or a premarital agreement, separate property agreement, or something like that. But you kind of have to dig into the details to know whether that applies or not. Another important concept that people will wonder about is trusts. So often trusts are not reporting entities. It's there's very rare. You can have a reporting entity as a trust, but it's very rare. And so usually trusts in and of themselves are not reporting entities under this law, but they often are beneficial owners. So we'll talk about what the beneficial owners are again, but so a trust can own an LLC. Well, the trust itself is not a reporting entity, but the trust is a beneficial owner, that the information about that trust would have to be provided according to this rule. And so then it gets into, okay, well, if the trust is a beneficial owner, then whose information do we need to submit? And this could be whoever is really in control of the entity itself. This could be the trustee. This could be the settlor or grantor if it's a revocable trust, for example, where the settlor or grantor has the right to revoke the entity and take it back. In some cases, it could be a special trustee or a trust protector that might have authority to dispose of trust assets. Anybody who's in control of that trust. So that means that in order to really do this correctly, you have to go into the trust and analyze the trust itself to understand who are the beneficial owners for that trust. Okay. So the question here is that we often get is, okay, well, if I own an LLC and I have multiple owners and I'm doing the filing for this LLC, what if somebody gives me the wrong information? Or what if I have a beneficiary who just flat out refuses to give me the information? So they don't want their passport and driver's license submitted to the government, and I am refusing to give you my information. Can I be held liable for that? Well, unfortunately, yes, according to FinCEN. And so there is, on the FinCEN website, there's a very detailed frequently asked questions section where it talks about this exact issue. And their suggestion is, hey, you need to talk with your beneficial owners and make sure that they're aware of the law and that they could be held liable for it. But that doesn't get you out of the liability in essence either. So that's actually pretty scary if you think about it. And so individuals or the corporate entities can be held liable. Individuals that file the reports can be held liable. And beneficial owners of the companies can be held liable for incorrect or false information. Probably the key here, if you're thinking about, if you're a person that's filing these on behalf of someone else, is that you're probably going to want to try to do something to protect yourself from a legal standpoint to make sure that at least you can show that it's not willful. So part of the rule is that it's a willful violation or willful failure to submit the information. So from an attorney standpoint, I'm thinking, okay, well, maybe I need to get my beneficial owner, if somebody's not going to give me the information, or maybe it's every single person that gives me the information, I want them to give me an affidavit or sign something that says, this is correct information, you can rely on it, and we're releasing you from liability and we accept liability if it's wrong. You may want to think about doing that because as the applicant or the person that's submitting this information, you could be held liable for false or wrong information. Okay, another question here that we often get is, okay, so I have an entity, but that entity is owned by other entities. Who are the beneficial owners and who do I report? Well, the way that FinCEN looks at it is that you have to analyze each entity as a separate standalone entity. And you have to analyze them at the individual ownership level. So as an example, so if you see here, we have the parent LLC. The parent LLC, this is just an example, is owned 50% by LLC A and 50% by LLC B. LLC A has two owners. One, individual X owns 70%, individual Y owns 30%, and then LLC B is a single member LLC owned 100% by Z. So the way that you look at this is you have to look at each individual level. So individual Y, analyzing it for parent LLC, X, Y, and Z. So individual X, as you can see, he owns 50% of LLC A, and then 70% of, I'm sorry, LLC A owns 50% of parent, and then X owns 70% of LLC A. So his overall ownership of parent LLC is 35%. So you kind of have to trace all the way through to the actual beneficial owners, all the way down, to understand who is the actual beneficial owner of parent LLC. Okay, so in this case, individual X and individual Z are beneficial owners of parent LLC, but Y is not, because Y only owns 30% of a 50% of parent LLC. And the other probably important thing to understand about that is that parent LLC is a reporting entity, LLC A is a reporting entity, and LLC B is a reporting entity. So it's 3 reports here. Okay, so what information is actually submitted to the government? One is information on the actual reporting company. And this is the things that you might think of usually, which would be the legal name, any DBAs, addresses, where it was formed, and the tax ID. For the individual beneficial owner and the company applicants, this would be the legal name, date of birth, current residential address. You can give a license, driver's license or passport, and an image of that driver's license or passport along with it. They also have this idea of something called a FinCEN identifier. The idea here is that if you own multiple LLCs or multiple entities, you can submit, as a beneficial owner, you can submit your information to FinCEN, which would have your date of birth, name, address, all that stuff, passport. And then they would give you a FinCEN ID, a unique FinCEN ID that you could then, instead of giving all that other information to each entity, you would give the FinCEN ID to each entity, which is just trying to help out business owners that own multiple entities. This would be pretty attractive for them to do. One of the key things to remember, though, is that one of the requirements is that within 30 days, any change that's made, you have to report that change to FinCEN. So if there's a change in an address, for example, say one of the business owners moves, or say you move, well then within 30 days, you're going to have to update the report to FinCEN of that change. And that would be either the FinCEN identifier or within the report itself. For reporting, there's several different timelines that you have to keep in mind. One is if the entity was formed before January 1st, 2025. For those entities, so those are existing entities as of January 1st. You have this year to file, and you have to file before January 1st, 2025. For new companies, say new companies that were formed within 2024, this year, you have 90 days to file. It was originally 30 days, but the FinCEN has given us a little bit of a break on entities formed this year alone. After this year, it goes back to 30 days after formation. And then one of the things that, so it's a one-time filing, except that anytime anything changes to any of the beneficial owners, any of the ownership structure, addresses of any of the beneficial owners, their passport changes, their driver's license changes, then within 30 days of that change, you're supposed to update the report with FinCEN. So that's going to be an ongoing obligation for reporting. One question that we are getting a lot is whether this reporting is the practice of law or not. So I'm kind of lucky in that I kind of sit in both worlds, CPA world and the legal world, because I'm a CPA and an attorney. At this point, it's unclear. FinCEN, in their frequently asked questions section, says that it's CPAs and lawyers are able to advise clients on this kind of reporting. But we're hearing that a lot of insurance companies are not covering CPA firms under their malpractice because they're viewing it as a practice of law. And so basically our advice at this point is really just to check with your insurance company to see if they're going to cover it. Our experience is that it's hit or miss. Some are, some aren't, depending on the insurance company. The Journal of Accountancy and AICPA are kind of the same, under the same idea in that they're not sure if it's practice of law or not. It just may rise to the practice of law. Probably the biggest thing here is that we know that CPAs are able to advise clients on tax matters, and there's no issue there. So does this extend to that or not? That's the part that's unclear. Okay, how to report. Actually, it's pretty easy. FinCEN on the website, the FinCEN website has a fairly straightforward way of filing the reports. What you're seeing there on the screen is the actual BOI reporting website. And so you can create a FinCEN identifier there. You can click on the link to file the report. And there's actually several different ways that you can file the report within that website. You can do it with a PDF. So it's a smart PDF. I've done it myself, where you can download the PDF, enter in the information. It's pretty straightforward. I have seen where there's a few bugs with it, but it's pretty straightforward. They also have an online option where you can enter the data directly into the website. And then there's an option for service providers called an API, which is an application programming interface. We actually have a side company called VentureVault that we are doing this with. So in essence, we have kind of a direct link using programming and software to upload and change information on these reports. Okay, what happens if you decide you don't want to comply? The problem with this is that there are civil and criminal penalties, potentially, for willful violations. On the civil side, up to $591 per day, per entity. And that's unlimited. So that can go as long as you're not filed correctly. Now, it was $500 a day. Why they increased it to $591 a day, I don't know. It seems kind of strange, but it is what it is. And then there's also criminal penalties. Now, there's always a question of, okay, well, how do they know that you're not in compliance? And are they really going to go after people that aren't in compliance? We don't know that yet. Here we are, we're 2 months into it, and we don't really quite know. But in my mind, there's some information that at some point, I would think that they're going to start to try to make some examples of people that haven't filed correctly. And the other thing is, I would say some information is readily checkable through computers. So FinCEN and the IRS are their sister organizations, and they can share information. So when you file a partnership tax return or you file a corporation, you have to say within the tax return who the owners are. Well, for example, I don't know if the government is doing this yet, but I would think that could be one easy way for the government to check if you've actually filed your report, and if it's correct. So just as an example, this is still kind of an unknown. So what do you do? Well, first of all, I would say you don't want to wait. One of the reasons why we are encouraging our clients and doing these webinars is really because of self-preservation. We expect that there's going to be a lot of people that are going to say, oh, we'll just get to this later in the year, and we'll just deal with it in summertime or maybe next fall, and maybe the government will change, who knows. Well, I would highly encourage you not to do that if you plan on having somebody help you with these. So just to kind of give you an idea, FinCEN says that there are 33 million of these reports that have to be filed. And if we say that Texas is 10% of those, so that gets us down to 3 million-ish in Texas. And say half of the people do their own, that's 1.5 million of these reports that are going to be done by service providers. And so say our law firm gets 1% of those, which I would kind of bet that we do at a minimum. That's 15,000 reports that we are going to have to do towards the end of the year. I've been talking with temporary staffing agencies, and we're seriously talking about bringing on anywhere from 20 to 25 people to help with this at the end of the year. It's nuts. And so what I would just say is, if you're going to have somebody that's helping you with these reports, your CPA or an attorney, they're going to be in the same boat as I am, and they're going to be totally swamped at the end of the year because of this. So don't wait. One other thing I was just going to show you is that the way that we are currently handling this, because we expect that there's going to be a huge influx of volume, is that we're trying to automate and make this as streamlined as possible using our separate software company called Venture Vault. And I'm not going to go into huge detail about what this is. We're happy to talk to you about it later if you want. But we are using Venture Vault. I mentioned the API having the direct software interface with FinCEN. We're doing this with Venture Vault. And so, so we're able to hopefully make this as streamlined as possible while still being able to talk with clients and explain to them what the law is and help them file their reports on time. Okay, that is all that I have for the regular presentation. I don't know if we had any comments in the chat box. Let's see here. I don't think that we did. So that's all for today. If you have any questions, feel free to reach out to me or Carly. Her information is there.
Excuse me, sir. Can I ask sorry, it's late in the day, I know, but if we are a solely owned, sole proprietorship version of a LLC, and we've just been reporting as a Schedule C on our 1040, do we need to do this FMSA?
Absolutely, you do. Yep. So it has nothing to do with, and that's a good question, because this often happens, because you may not even be filing a tax return. If you're a single member LLC, it's a disregarded entity from a tax standpoint, and so you may not even have a tax return that you're filing every year for it. You still have to file this BOI reporting subject to it. All right, I do have a couple more questions in here. Let's see. Okay. Do we know if the information submitted to FinCEN will be kept private or be considered public? So what they've said that the information that's submitted, and obviously it's very sensitive information, and your passport information, driver's license, social security number, they've said that it's private, but I would consider it kind of like private, like the IRS. It's not going to be public, but they can share that information amongst different agencies within the government. So if they've already said that they potentially could share information between the IRS and FinCEN, or with law enforcement, for example. So it's private, but not private within the government. Any other questions that anybody has? All right. Well, thank you so much. Thanks for joining. And if you have any other questions, feel free to hit me up. And I appreciate everybody's attendance. Thanks so much.